Hello, welcome everyone. This is actually the best of the beast. The beast is the S&P 500. Last time we met, or at least the last time I did the video, I said a brazen call that we would see a retest of the highs, and it's exactly where we are pretty much right now. What happened today? Follow through. President Trump tweets that things may go well with President Xi in China. The Federal Open Market Committee meets tomorrow. There's a lot going on. I tell you what, I mean, unless the president assumes that the market may react negatively to the fact that the Fed will not raise rates tomorrow. I mean, unemployment report still shows a lot of people employed. We still have a healthy economy. It's just that consumer confidence has declined due to the unknown factor of, again, what these tariffs would have had an impact on the global economy. That's really what this is all about. People are afraid not of what's happening now, but what will happen in the future. And that's what this stock market's about. It's pretty much a futuristic, people trying to, figure out where things will be. Should I be in cash? Should I be in bonds? Should I be in consumer staples? Where's the safest place for me to be? Gold? And that's what the market's prognosticating. A couple of the indicators that I like to use. We have, again, a proprietary volume indicator here. This is stochastics at the bottom, and this is the advanced decline. And as you can see, we're pretty much breaking out almost to new, and again, this is a weekly analysis, a new weekly high. We got a little bit of a crossover of the on-balance volume over a moving average study, so it does reflect that there's an increase in volume. So where are we going to go from here? Let's take a gander or a look-see. Let me change this chart up for you, and we'll go from a week because, quite frankly, here it is Tuesday mid-session. I don't know how this market is going to close on a Friday, but let's take a look today and see, before the Fed even meets, what are the indicators suggesting? Let's take a look together here. First and foremost, it's mid-session. I'm not sure where we're going to close, but this would be a new high breakout in the advanced decline cumulative ratio line in the S&P 500. Why is that important? Because the S&P 500 is a capitalized weighted stock index. It puts preference or more priority to larger cap stocks like an Apple, a Microsoft, an Amazon, etc., right? So when we see more stocks rise than not, it shows that it is a broad-based rally, and that is actually the healthiest thing we want to see. We don't want to see a stock market led by just a handful of names all the time. So that's why this is a very unique market, a very dynamic market condition. So the advanced decline is really showing some strength. And keep in mind, there's a few sector ETFs that we've been watching for breakouts. You may look at some of these older videos and you'll know that LABU, L-A-B-U, that's the leveraged ETF on biotech. XOP, that's the oil and gas exploration sector ETF in energy. And then finally, we want to see participation in a few other sectors that have not really joined this party. Financials, for one. It's been years that people are wondering when financials are going to break out and join this party of this new high in the equity market. So right now, what we could say is that the market did maintain some structural strength. We got this kind of like a channel sideways, a breakout. I don't know how we're going to end the day. We backed off the highs just a tad. It is, again, 2:47, an hour and 13 minutes till the end of the bell. And I wanted to provide you with this information so that you can be prepared of what May is starting to populate and how is this going to help us in trades for the rest of the week. For starters, we have decent volume. Secondary indicator with the on-balance volume is positive, and if this breadth advanced decline breaks out to a newer high, it does suggest a new high move coming, still to come, in the S&P 500. So that's what I look for there. All right, now let's go over and look at this indicator, or index, excuse me, not index, but this index, which is the Russell. Now this is kind of interesting because there's a book I wrote in 2006 that was pretty good. In fact, it had Well, any famous person that was in, or at the time, popular Forex traders in the old days, and this was written back. I mean, this book's so old that the pages are yellow. But this was specifically geared for Forex, and it had a little economic conditions. And I wanted to share this chart, if you can see that. It is a graph of the business cycle. If you can kind of feast your eyes on that. And why is that important? Because in early contraction, when people are afraid that we're going to see an early contraction, economic contraction, consumer staples and utilities are what leads the market. All right, the last thing people want to do is buy this thing. This is growth, this is the Russell, and that's exactly what we've seen in leadership in this market. We've seen leadership come in consumer staples and utilities, bonds, and gold. So it's been showing that there's fear in the market, and that people were expecting to see an economic slowdown. That's what the talk is about the Fed lowering interest rates. And I don't believe the Fed will lower interest rates at this June meeting. I believe that they should stay the course. Because if they stay the course and they say we're willing to help, then guess what? That's still undertone supportive in the market. If there is a lowered expectation that we're going to implement more tariffs, which is a taxing effect on, at the end of the day, you and I, consumers, that would be pretty good if President Trump does a deal, or at least tones down the jargon with China's our trade partners, right? So with that said, when would we see participation coming into the Russell growth stocks? A lot of people think that growth stocks are the small companies that provide parts and services to larger corporations, and they're the ones taking the brunt of any tariffs that would be enacted, or at least a recessionary pressure on the market. And that's why you see a lot of stocks going up, Microsoft. That's why you see Google and other names. We'll get into that in just a minute. But what I wanted to point out to you is we did form what we would call a weekly equal and opposite. And while we are nowhere near last year's highs like we are in the S&Ps, we're not even near where we were at the end of, or at least the beginning of, let's call it April, May time period. So what is going to launch the market here? Well, we don't have any volume, and what we are seeing is kind of a positive zigzag in the advanced decline. So the fact is that we did get a positive breakout in the advanced decline, as I'm sharing with you right now, a cumulative advanced decline reading, and that's what this is. And this is only based on, of course, the Russell. This is not the advanced decline on the NYSE. Let me go over here and let's get into on balance volume, which we have to rescale for you. So I want you to take a look at the trend of volume here, and this might help explain things too. On the big dramatic sell-off that we saw in the Russell over that 4-week period of time, there wasn't substantial volume behind it. And so there's not a lot of substantial volume coming back either. Markets generally sell off a lot faster than they rally. But I think this is more of a buyer's strike rather than it's a lot of stocks need to be sold. Like they're not making any money, they can't provide any profits, et cetera, et cetera. Most people feel that way about the small cap to begin with. But if we do see an upswing in economic conditions or the thought or confidence, that's when maybe investment managers will move back into growth from what we call value. All right, now let's get into what I feel we need to see, at least from a technical perspective, to get the Russell moving. All right, now we did a really neat thing from a technical analysis perspective. First and foremost, you'll see here the volume is looking like we're seeing a very sharp recovery recently. Next, let's take a look at the daily reading, the cumulative daily reading of advanced decline. So, over time, it looks a little bit different than the weekly higher time frame analysis, but we are seeing a reflection of positive increase slowly but surely. We have positive increase in OBV, and this is my specialized volume tool, and it's also positive. What I'd like to see, quite frankly, is I want to see today, this is just starting to fail off the highs. I want to make sure we close greater than what has been a massive resistance support zone. It's this gold line. That's a person's pivot, longer term quarterly number. And you can see I'm marking X's, And I could go all the way across the spectrum here. In fact, let me just bring a line down in the sand and share with you, what does that level represent? I mean, we had resistance over here, resistance over here, resistance over there, a swing point where it held and then it broke out. It came back, it tested the area, it failed, it came back, it tested the area, it acted as support, resistance, and here we find ourselves back at the same spot. This is a magical, I don't know if you call it a voodoo, a twilight zone level, but it definitely is a spot that traders are watching and waiting for a daily close greater than that line in the sand. To make things better, we would like to see at least two mints in one. I'm just teasing. We want to see at least 2 daily closes greater than that line in the sand, and that would eliminate what? Just an equal and opposite. Market tries to break out to the upside, and then a day later, boom, it fails and goes into the downside. So we do have positive volume. We do have positive advanced decline, but we want to see 2 days of accelerated value hold above that yellow line in the sand. And then I believe we will start to see traders jump on that side of the fence, so to speak. What's holding this sector down? Or what sector is actually holding back, in my humble opinion, the Russell? Regional banks, the KRE. Lots of small cap regional banks in the Russell. Also, let's take a look at XLE. A lot of small cap energy stocks. If you take a look, what's interesting is that while the Russell's not breaking out, notice those two sectors, regional banks and XOP or energy, XLE, not breaking up to the upside, not breaking out. And that is I think the big tell, that if we can get those sectors up, then that's going to be the time that you can buy into the Russell. All right, let's go. I think at this point in time, I want to share with you a couple other little things that we've got going on. I hope you learned from what we are sharing with you right now. First, we noted that we want to look at a combination of both indicators that are expressly related to talking to us as traders as to the condition of the market. I don't need a price-based indicator. I want an indicator that reflects the value change of the market. And that was what? The advanced decline. Next, we want to see volume. That's the market, the momentum behind the drive. No volume, no momentum. It makes the market easy to be pushed up and then right back down. We want to see more participation in the market. We want to see more money flow coming into the market. So those are the two things that you should, I hope, picked up here. And then as it relates to the Russell, we want results to be seen in the regional banks, the KRE, and we also want to pay focus on energy. Those are going to be the key focuses for lifting the Russell back to the upside. All right, this little theory, or I would say business theory of economic business cycles. Let me share with you utilities. So when I said that utilities have been leading the market, this is the XLU. This is a weekly chart, and lo and behold, utilities have been leading the charge all the way up. So investors or fund managers and those who control the market, so to speak, they're the ones pouring into utilities because that indicates that segment of people controlling money or money management, they believe we are entering in a recession or an early contraction period of economic conditions. So what are the two sectors that we see money pouring into? Utilities, and then the next one, XLP, staples. That's what they consider to be defensive. Look at the consumer staples sector. It also rallied. So when you look at that and you look at TLT bonds, this may help explain money flow is going into sectors, and these are the ones that are lifting up and making newer highs. What about technology, XLK? Well, it's lagging a bit. This is a weekly chart, and as you can see, it's not breaking out to new highs. What about looking at industrials, XLI? We got a little bid going on today in the industrials, and yesterday, thanks in part to the President Trump's tweet, and here I can demonstrate this. You got that PPS indicator right here, which would show that we've got today a little bit of liftoff out of this particular sector as a whole. What about SMH, semiconductors? Well, generally we like to see semiconductors, and in a really good economic expansion, capital spending, corporations spend money on new technology, new computers. People invest in what we need new technology for, and when leadership is afraid that we're going to see contraction, money gets tight, people don't spend, capex spending goes down, semis suffer. But what we would like to see, if we're going to start to continue to see an upward trend in the equity market, watch your semis at this point in time, watch the energy, and also let's pay attention that we see maybe utilities sell off. That would be a really good harbinger that the market in other sectors are starting to pick up. If we can get money taken out of utilities and go back to work into aggressive sectors, then that would be dynamic. In fact, part of our positioning here, and you may have seen what we've put together in our weekly newsletter, at least what I put out in videos a few weeks ago, we got positions, a long position from way back when. It's a long-term equity option, a leap in Newmont Mining. And I'm thinking Newmont still has on its own merits. There's a couple things that I'm looking at the end of the month, and I'll share this with you right now, friends. Big upside trend. It's had a strong, longer-term consolidation, right? And you can see that I've already laid it out in these yellow lines. But also take a look. We are against what we call a last conditional change candle. It's one of my famous proprietary setups that gives us a resistance spot, and when markets close greater than those resistance spots, it indicates that the market can then thus move higher. We are sitting here at the cusp at exactly 35.98 of where that old high was that caused the market to go down. It tried to go up, it went down, and we're right back up. If we break out on a monthly closing basis, which is less than 2 weeks away, I'm suspecting, you may think this could be foolish, but think about this, gang. We've got gold up, and it's not up because people are afraid and they want to be invested in gold because of inflation, but it could be because of overall demand. And what if demand is increasing not just in India or the normal courses, but what about China? What about Chinese, the culture of Chinese? If everyone chooses and says that, hey, I've made it in this world as a businessman, and now I want a presidential Rolex, or I want the Cartier gold band, and if everyone is interested in now wearing gold, wow, how much demand could we see? I'm just suggesting this could be another facet of what could lift demand for gold other than from investment needs, right? Jewelry demand. If jewelry demand increases from at least the Chinese Asian aspect, boy, this market really could fly. And as far as I'm concerned, if we see a monthly breakout above this high, I'm thinking this is a measured objective that's going to put Newmont Mining, at least if you take a measuring objective, it's going to put it up to around between 52 to 55. That would be the measuring objective based on this longer term monthly chart. So we'll be watchful of this. One other aspect I want you to focus in on. Look at the volume action. Look at my volume action. That is leading the market. This is a longer term chart on Newmont. This does not suggest to be short in the metals complex. All right, we have BB&T, a regional bank. We have a bear put spread that we put on for August in TLT. Not really doing anything. We put it on at a great price, so we're not taking a lot of heat, or if any at all. It's just not producing. We're long AT&T. We have a small position from 36 and change, trying to add to it to Tilray. Canopy Growth has earnings on Thursday. I don't think it's going to impact Tilray as much, but I know there's like bountiful boatloads of pot all over the country, especially an oversupply saturation in Oregon. But I think that what's really neat about this, and I have some other ideas of why we're going to see the pot producers, a company like a Tilray, expand in the future. And that's why I'm not going all in on this trade here finally. I'm scaling in. We only have a third position from around 36 and change. I haven't added on because I'm looking for either a breakout above these little lines in the sand, which are resistant levels, or I'm looking for a actual call to action by a little arrow, a PPS. So we're up a couple bucks on a small position and are scaling into this over time. Next, GE. That's another one. Best Buy. I think Best Buy is going to see a significant rise. Remember, at earnings, they beat earnings top and bottom. But what happened is, unfortunately, they announced the change of leadership. Best Buy, Geek Squad. I think Father's Day was off the charts, except for in our household. We didn't see a brand new 75-inch screen QLED TV in my man's cave, but there are strong reports, consumer spending. Geek Squad's doing pretty well. And here, at least in consumer discretionary, if home sales are increasing, existing home sales, new home sales, you know, the wives, they all want things looking pretty. So curtains and things like that, and, you know, you get that. But a guy, just make me happy. Give me a big screen TV. And not only that, but I think the Geek Squad has value added for purchases for helping people with all these viruses. So anyway, Geek Squad and Best Buy is one that if we can clear this resistance and that resistance, we're definitely off to the races. 75's not out of the picture in the near term. So I just want to point that out to you. Look at the 70-30. It's an old resistance level. It's a new resistance level using Person's pivots. If we can clear that line in the sand easily, we're going to tackle that old high right there, which was right before the last earnings. Why did the stock go down? Change of leadership. So anyway, we got position there. YY Inc. Technology, and we have a position in here, and I'm looking for the same kind of weirdness here. If you notice, weirdness in what way, John? Another pivot level, just like Best Buy. It's almost very similar in nature. We clear that line in the sand, and I think this is a new high breakout. I'm loving the PMC indicator here. We added this. This is a proprietary indicator I created for relative strength, and I put this on. It's under my name, John Person, in Thinkorswim platform. You ought to be using this to help you identify if a stock is in one of 4 stages. It's outperforming, bright blue. It's underperforming, getting ready to break down, dark blue. It is underperforming, which actually gives you a strong confidence, or it confirms a valid sell signal. If the relative strength is declining, traders will be getting out of the trade. Next, it also, the 3rd stage or 4th stage final is this fuchsia, and that means its relative strength is improving versus the overall market. So we go from outperform, underperform, it's definitely weakening, and it's improving. So those are the 4 stages that the PMC indicator helps us to identify. Anyway, that's why we'll see what happens in the course there. LABU, many of you have seen my videos. You know, we've been talking about the biotech, and I guess now we've got everyone all hot and bothered about biotech. And one of the things that's really interesting, and I hope you learned from this, because right here, volume indicator, stock's going down. And I know we did the video on this before we went for our Person's Planet financial cruise. Look at the volume, look at the relative strength. It was leading up, showing that there was money coming into this sector. So hopefully you get a couple day pullback and then an acceleration to the upside. Couple day pullback and then acceleration through to the upside. And what am I expecting? A minimum objective about the 60 in LABU. Currently we're at 49, not a hard call. All right, now let's wrap this up. Last position, Micron. Why Micron? I saw the same thing in Micron, and you know we did this video here. Same story. Check out this. Consider the coincidence factor. The relative strength is starting to improve. The volume was starting to show improvement right into here. So we didn't really get lift off yet, but relative to the rest of the sector, this Micron technology looked like the safer bet, and that's why we went with Micron instead. So now what are we waiting for? We're waiting for follow through to add to the trade. That's right, add to the trade. Not get out, but add. If we can close greater than the pivot, this line in the sand right there, a close greater than that in pivot, boy, I don't think there's any unreasonable expectations to see the market get back to where it all started the party from, or at least broke down from, and get back up to 42 into earnings, which is only about, what, 3.5, 4 weeks away. Earnings season, I know. We just finished one. We're coming up to the next one. We got to get through FOMC on Wednesday. We got to get through the G20 meeting on Thursday. We've got to get through the option quadruple witching event that's taking place this week. There's a lot of exciting things that are building in the market right now. And yes, I'm not still at this point, I'm least to be bearish on the stock market. I think there's still some very strong values. Lastly, let me show you this, because this is important. Again, it's an if-then. If today was Friday, but it's not. We are right now, the Dow, biotech, Russell, transports, regional banks, semiconductor, all switching from being a bearish trend on a weekly basis to a bullish trend on a weekly basis. So again, I'll follow up with you this week, but take a snapshot of where these prices are right here and take a snapshot of this blinking column right there. This is telling me that if the market closes these lines in the sand, if they close, and it's right here, starting from tech, industrials, financials, energy, spiders, semis, regionals, IYT, transports, all of this stuff is going to be generating fresh new weekly buy signals, gang, and that's why I'm not expressly bearish the market. Thanks for watching. It's great to be back in the saddle, and yes, we had a wonderful time on the Person Financial Cruise. I thank you for watching. If you liked what we have here, give us a thumbs up or post a comment saying, hey, John, I'd like to see some other things, and we'll definitely accommodate that. Thanks again for watching, and I hope you learned something, specifically which indicators work for specific markets and why. Thanks again.